Question 1. Which of the following is an example of risk transfer in the context of risk management? A. A business installing fire extinguishers to reduce the likelihood of a fire. B. A homeowner purchasing homeowners insurance to protect against the financial consequences of a house fire. C. An individual taking measures to avoid driving in hazardous weather conditions. D. A company reducing the risk of theft by implementing an inventory security system. Answer: B. A homeowner purchasing homeowners insurance to protect against the financial consequences of a house fire. Explanation: risk transfer occurs when the financial burden of a risk is shifted to another party, typically an insurance company. By purchasing homeowners insurance, the homeowner transfers the financial responsibility of a potential loss from a house fire to the insurance company. Other options reflect risk control strategies A, C, D rather than transfer. Question 2. Scenario: Mr. Thompson has recently purchased a health insurance policy with a PPO network. He needs to see a specialist for a medical condition, but the specialist is not part of the PPO network. What will likely happen to Mr. Thompson's out-of-pocket costs? A. Mr. Thompson will incur no additional costs because his PPO network covers all specialists. B. Mr. Thompson will pay the same out-of-pocket costs regardless of whether the specialist is in-network or out-of-network. C. Mr. Thompson will likely incur higher out-of-pocket costs because the specialist is out of network. D. Mr. Thompson will need to seek pre-authorization before seeing the specialist. Answer: C. Mr. Thompson will likely incur higher out-of-pocket costs because the specialist is out of network. Explanation: PPO plans typically cover out-of-network care, but at a higher cost. In-network providers have negotiated rates that reduce the insured's out-of-pocket expenses, while out-of-network providers usually result in higher copays, deductibles, or coinsurance for the insured. Option A is incorrect because PPOs do not cover all specialists without cost differences. Option B is incorrect because out-of-network care usually costs more. Option D is an action related to certain health insurance policies, but it does not directly relate to out-of-network coverage consequences. Question 3. Which of the following is true regarding the duty to defend in liability insurance policies? A. The insurer has no obligation to defend the insured if the policyholder is clearly liable for the incident. B. The insurer must defend the insured even if the claim is outside the scope of the policy as long as there is a possibility that the claim may fall within the policy. C. The insurer is required to settle all claims in favor of the insured regardless of fault. D. The insured is responsible for paying legal costs directly to the attorney hired by the insurer. Answer: B. The insurer must defend the insured even if the claim is outside the scope of the policy as long as there is a possibility that the claim may fall within the policy. Explanation: the duty to defend is an obligation of insurers in liability insurance contracts to provide defense to the insured even if the claim appears to be outside the scope of coverage. As long as there is a possibility that the claim could be covered, the insurer must provide a defense. This duty is broader than the duty to indemnify and cover costs. Option A is incorrect because the duty to defend exists even if the claim may not ultimately be covered. Option C is incorrect as the insurer is not required to settle, only to defend. Option D is incorrect because the insurer typically covers legal costs as part of the defense, not the insured. Question 4. Which of the following is a characteristic of a claims-made liability insurance policy? A. The policy covers claims made during the policy period, regardless of when the incident occurred. B. The policy covers incidents that occur during the policy period, even if the claim is made after the policy period has ended. C. The policy provides coverage for claims made after the policy period as long as the incident occurred within a specified retroactive period. D. The policy covers incidents that occur after the policy period but does not require the claims to be made. Answer: C. The policy provides coverage for claims made after the policy period as long as the incident occurred within a specified retroactive period. Explanation: a claims-made policy only covers claims made during the policy period, but it can cover incidents that happen prior to the policy period if they fall within a retroactive period specified in the policy. Option A is incorrect because claims-made policies are only concerned with claims made during the policy period, not when the incident occurred. Option B describes an occurrence policy, not a claims-made policy. Option D is incorrect because the claims-made policy requires the claim to be made within the policy period or the retroactive period. Question 5. Which of the following is an example of a hazard in risk management? A. A homeowner purchasing fire insurance for their property. B. A business installing smoke detectors to reduce the risk of fire damage. C. A company storing flammable chemicals near an open flame. D. An individual avoiding high-risk activities like skydiving. Answer C. A company storing flammable chemicals near an open flame. Explanation: a hazard is something that increases the likelihood or severity of a risk. Storing flammable chemicals near an open flame is a clear example of a hazard that increases the risk of a fire. Option A refers to risk transfer through insurance, not a hazard. Option B is an example of a risk control measure, not a hazard. Option D is an example of risk avoidance, not a hazard. Question 6. Scenario: Sarah purchased a whole life insurance policy with a face value of $100,000. After 10 years, the policy accumulates the cash value of $20,000. She decides to borrow $10,000 from the policy. Which of the following is the most likely consequence of this loan? A. The policy's death benefit will be reduced by the loan amount, but the cash value will remain unchanged. B. The loan will be considered taxable income unless it is repaid. C. The policy will automatically lapse if the loan is not repaid. D. The interest on the loan will be charged at a fixed rate regardless of the policy's performance. Answer A. The policy's death benefit will be reduced by the loan amount, but the cash value will remain unchanged. Explanation: when a policyholder borrows from the cash value of a whole life insurance policy, the death benefit is reduced by the loan amount if it is not repaid. The cash value is not affected by the loan unless the loan exceeds the cash value, leading to potential policy lapse. Option B is incorrect because loans from life insurance policies are generally not considered taxable income unless the policy lapses with an outstanding loan. Option C is incorrect. The policy won't automatically lapse unless the loan balance exceeds the cash value. Option D is incorrect because the interest rate is typically set by the insurer and may vary depending on the policy terms. Question 7. Which of the following is true regarding the coordination of benefits provision in health insurance? A. The provision ensures that the total benefits paid by multiple insurers do not exceed the actual cost of the healthcare. B. The provision allows for multiple policies to provide full coverage for all medical expenses regardless of the total cost. C. The provision allows the primary insurer to pay its benefits first, and the secondary insurer pays any remaining balance. D. The provision requires insurers to pay benefits in a predetermined order, regardless of which insurer is primary or secondary. Answer A. The provision ensures that the total benefits paid by multiple insurers do not exceed the actual cost of the healthcare. Explanation: coordination of benefits is designed to prevent overpayment by ensuring that the combined benefits from all insurers do not exceed the cost of the medical services. Option B is incorrect because does not allow for full coverage by multiple policies unless specified, and it limits payments to the actual cost. Option C is correct in part but does not reflect the total purpose of Option D is incorrect as rules typically determine which insurer is primary and which is secondary based on the insured situation, rather than a predetermined order. Question 8. Which of the following is true about underwriting in property insurance? A. Underwriting primarily considers the policyholder's income and job stability when determining coverage. B. Underwriting assesses the risk factors related to the property, such as location, condition, and value. C. Underwriting in property insurance is concerned with the policyholder's health history and medical records. D. Underwriting only considers the cost of the property when determining coverage and premiums. Answer: B. Underwriting assesses the risk factors related to the property, such as location, condition, and value. Explanation: in property insurance, underwriting involves evaluating the risk factors associated with the property, including its location, condition, and value, in order to determine appropriate coverage and premium rates. Option A is incorrect because income and job stability are not typically primary factors in property insurance underwriting. Option C is related to health insurance underwriting, not property insurance. Option D is incorrect because underwriting also considers factors beyond the cost of the property, such as its condition and location. Question 9. Which of the following is an example of subrogation in insurance? A. An insured person receiving payment from their insurance company for a covered loss. B. An insurer paying for damages caused by an insured individual, then seeking reimbursement from the responsible third party. C. An insurance policy covering the damages caused by a natural disaster. D. An insured person transferring ownership of a property to the insurer after a total loss. Answer: B. An insurer paying for damages caused by an insured individual, then seeking reimbursement from the responsible third party. Explanation: subrogation is the process by which an insurer seeks reimbursement from a third party that caused the damage after the insurer has paid for the insured's loss. This helps the insurer recover the amount paid to the insured. Option A is a standard claim payout, not subrogation. Option C is an example of property coverage, not subrogation. Option D describes a transfer of property ownership which is not related to subrogation. Question 10. What is the primary purpose of the grace period in a life insurance policy? A. To allow the policyholder additional time to pay premiums after the due date without risking policy lapse. B. To provide the policyholder with the option to increase the death benefit during the policy term. C. To allow the insurance company to audit the policyholder's health and financial status. D. To provide a refund for any unearned premiums if the policyholder cancels the policy. Answer A. To allow the policyholder additional time to pay premiums after the due date without risking policy lapse. Explanation: the grace period is a provision in life insurance policies that gives the policyholder a specified period, usually 30 days, to pay overdue premiums without the policy lapsing. Option B is incorrect because the grace period does not relate to increasing the death benefit. Option C is incorrect as it describes policy assessments, not the grace period. Option D refers to policy cancellations, which is a different aspect of policy terms. Question 11. Which of the following best describes liability insurance? A. Insurance that covers only the cost of property damage caused by the insured. B. Insurance that provides coverage for legal defense and damages to third parties in the event of an accident or injury. C. Insurance that only covers medical expenses for the insured. D. Insurance that provides a fixed income to the insured in case of disability. Answer: B. Insurance that provides coverage for legal defense and damages to third parties in the event of an accident or injury. Explanation: liability insurance covers the insured's legal responsibilities to third parties for accidents or injuries that occur due to their actions or negligence. Option A is incorrect because liability insurance also covers injury claims. Option C is incorrect. Medical insurance covers medical expenses, not liability. Option D describes disability insurance, not liability insurance. Question 12. Which of the following is an example of unilateral insurance contract? A. A life insurance policy where the insurer promises to pay a death benefit in exchange for premiums. B. A health insurance policy where both the insurer and the policyholder make promises. C. A home insurance policy where the policyholder agrees to follow specific safety measures. D. A contract where both parties agree to a specific risk-sharing arrangement. Answer A. A life insurance policy where the insurer promises to pay a death benefit in exchange for premiums. Explanation: a unilateral contract is one where only one party makes a legally enforceable promise. In life insurance, the insurer promises to pay the death benefit, but the insured does not make a promise in return other than to pay premiums. Option B refers to a bilateral contract which involves mutual promises. Option C involves conditions, not a unilateral promise. Option D is not specific to unilateral contracts. Question 13. Which of the following is a feature of a cash value life insurance policy? A. The policy provides only a death benefit with no savings component. B. The policy accumulates a cash value over time that can be borrowed against or withdrawn. C. The policy provides a death benefit but does not accumulate any cash value. D. The policy's premiums decrease as the policyholder ages. Answer B. The policy accumulates a cash value over time that can be borrowed against or withdrawn. Explanation: a cash value life insurance policy, such as whole life insurance, includes an investment component that builds cash value over time, which the policyholder can borrow against or withdraw. Option A refers to term life insurance, which does not have a cash value. Option C describes a term life insurance policy without any investment feature. Option D is incorrect because premiums in cash value policies tend to remain level, not decrease. Question 14. Which of the following is a type of risk retention strategy? A. Purchasing insurance to cover potential losses. B. Transferring the risk to another party through a contract. C. Self-insuring by setting aside funds to cover potential losses. D. Reducing the likelihood of a loss occurring through preventive measures. Answer C. Self-insuring by setting aside funds to cover potential losses. Explanation: Risk retention is when an individual or organization chooses to absorb the risk themselves rather than transferring it to an insurer. Self-insuring is an example of risk retention. Option A refers to risk transfer through insurance. Option B describes risk transfer through contracts, not retention. Option D is risk reduction, not retention. Question 15. Which of the following is the primary difference between a named peril and a more risky insurance policy? A. A named peril policy only covers specific perils listed in the policy, while an all-risk policy covers all perils except those specifically excluded. B. A named peril policy covers all types of loss, while an all-risk policy only covers certain perils. C. A named peril policy covers only natural disasters, while an all-risk policy covers all risks. D. A named peril policy covers property loss, while an all-risk policy covers only liability. Answer A. A named peril policy only covers specific perils listed in the policy, while an all-risk policy covers all perils except those specifically excluded. Explanation. A named peril policy covers only those specific risks or perils listed in the policy, while an all-risk policy provides broader coverage, covering all risks except for those that are explicitly excluded. Option B is incorrect because it describes the opposite. Option C incorrectly limits the scope of named peril and all-risk policies. Option D is incorrect as it focuses only on property and liability, while both policy types can cover both. Question 16. Which of the following is an example of an excluded peril in a standard homeowner's insurance policy? A. Fire damage. B. Theft. C. Earthquake damage. D. Vandalism. Answer C. Earthquake damage. Explanation. Many standard homeowners insurance policies exclude certain types of risks or perils, such as earthquake damage. Coverage for these risks can often be added as a separate endorsement or rider. Option A and B are typically covered perils in homeowners insurance. Option D is also typically covered unless specifically excluded. Question 17. Scenario. John purchased an automobile insurance policy with the minimum required liability coverage in his state. He is involved in a car accident where he is at fault and his car causes $15,000 in property damage to another vehicle. His liability coverage is only $10,000. Which of the following is most likely to occur? A. His insurance will cover the full $15,000 in damage. B. He will need to pay the additional $5,000 out of pocket. C. His insurance will refuse to pay for any damages. D. His insurance will pay the $10,000 and the remaining $5,000 will be covered by his health insurance. Answer B. He will need to pay the additional $5,000 out of pocket. Explanation. Since John's liability coverage is only $10,000, which is the minimum required in his state, the insurance will only cover up to that amount. John will need to pay the remaining $5,000 out of pocket. Option A is incorrect because the insurance will not cover more than the policy limits. Option C is incorrect because liability insurance does cover damages within the limits. Option D is incorrect because health insurance does not cover property damage. Question 18. Which of the following is the primary purpose of the insured's duties after loss clause in an insurance policy? A. To define the payment schedule for claims. B. To outline the process the insurer follows to investigate the claim. C. To require the insured to take specific steps to protect the property and cooperate with the insurer during the claim process. D. To specify the maximum amount the insurer will pay for claim. Answer C. To require the insured to take specific steps to protect the property and cooperate with the insurer during the claim process. Explanation. The insured's duties after loss clause outlines the actions the insured must take after loss occurs, such as protecting property from further damage, notifying the insurer, and cooperating during the claim investigation. Option A refers to the payment schedule, not the insured's duties. Option B refers to the insurer's role in investigating claims, not the insured's duties. Option D is related to the policy limits. Question 19. Which of the following describes underinsurance in the context of auto insurance? A. Carrying more insurance than needed for the value of the vehicle. B. Having sufficient insurance coverage to replace the vehicle in case of loss. C. Having inadequate coverage to fully repair or replace the vehicle in case of an accident. D. Failing to carry any insurance for the vehicle. Answer C. Having inadequate coverage to fully repair or replace the vehicle in case of an accident. Explanation. Underinsurance occurs when a policyholder has insufficient coverage to repair or replace their vehicle after an accident. Option A refers to overinsurance, not underinsurance. Option B describes adequate coverage, not underinsurance. Option D refers to uninsured, not underinsured. Question 20. What is the primary function of the primary and the secondary insurers in health insurance when coordination of benefits (COB) applies? A. The primary insurer pays the full amount of the claim, and the secondary insurer reimburses the insured. B. The primary insurer pays first, and the secondary insurer covers any remaining balance up to the policy limits. C. The primary insurer covers only preventive care, while the secondary insurer covers all other expenses. D. The secondary insurer pays first, and the primary insurer covers the balance. Answer: B. The primary insurer pays first, and the secondary insurer covers any remaining balance up to the policy limits. Explanation: in COB, the primary insurer pays first, and the secondary insurer pays any remaining balance up to the policy's coverage limits. Option A is incorrect because the primary insurer pays first. Option C is incorrect because COB applies to all claims, not just preventive care. Option D is incorrect because the primary insurer pays first in COB. Question 21. Which of the following is a characteristic of a deductible in an insurance policy? A. The amount the insured pays before the insurer pays any benefits. B. The maximum amount the insurer will pay for a covered loss. C. The amount the insurer pays to the insured for a loss. D. The cost of the insurance premium. Answer A. The amount the insured pays before the insurer pays any benefits. Explanation: a deductible is the amount the insured must pay out of pocket before the insurer starts to pay for a covered loss. Option B refers to the policy limit, not the deductible. Option C refers to the payout, not the deductible. Option D refers to the premium, not the deductible. Question 22. Which of the following insurance policies typically covers personal property in a home? A. Auto insurance policy. B. Health insurance policy. C. Homeowners insurance policy. D. Life insurance policy. Answer: C. Homeowners insurance policy. Explanation: homeowners insurance covers personal property inside the home, including furniture, electronics, and other items. Option A covers vehicles, not personal property. Option B covers medical expenses, not property. Option D covers life events, not personal property. Question 23. What does the term insured's duty to notify in an insurance policy mean? A. The insured must inform the insurer of any loss or damage within a specific time frame. B. The insured must pay the insurance premiums on time. C. The insured must prevent any further damage to the insured property. D. The insured must provide the insurer with medical records in case of an injury. Answer A. The insured must inform the insurer of any loss or damage within a specific time frame. Explanation: most insurance policies require the insured to notify the insurer of any loss or damage promptly to ensure the claim process can begin. Option B refers to the insured's obligation to pay premiums, but not to notify the insurer. Option C is part of the duty to prevent further damage, but it's not specifically the duty to notify. Option D is not typically required unless it's health insurance claim. Question 24. Which of the following is an example of vicarious liability? A. An employee causes an accident while driving a company car for business purposes. B. A homeowner is responsible for damage caused by a neighbor's dog. C. Person is liable for their own actions that lead to an accident. D. An insurance company assumes liability for claim under an umbrella policy. Answer A. An employee causes an accident while driving a company car for business purposes. Explanation: vicarious liability holds one party, such as an employer, responsible for the actions of another party, such as an employee, under certain circumstances. Option B refers to personal liability, not vicarious liability. Option C refers to individual liability. Option D refers to umbrella coverage, not vicarious liability. Question 25. Which of the following is typically covered by an umbrella insurance policy? A. Basic health insurance coverage. B. Liability claims exceeding the limits of a standard policy. C. Property damage to a vehicle. D. Medical expenses after a car accident. Answer B. Liability claims exceeding the limits of a standard policy. Explanation: an umbrella policy provides additional liability coverage that goes beyond the limits of standard policies, such as auto or homeowners insurance. Option A refers to health insurance, not umbrella insurance. Option C covers property damage, not liability. Option D refers to medical coverage, not umbrella insurance. Question 26. What is the primary purpose of subrogation in insurance? A. To prevent the insured from filing fraudulent claims. B. To allow the insurer to recover funds from the third party who caused the loss. C. To provide a policyholder with a refund of premiums. D. To allow the insured to change their coverage limits after a claim. Answer: B. To allow the insurer to recover funds from a third party who caused the loss. Explanation: subrogation allows the insurer to recover the money it paid for a claim from a third party who was responsible for causing the loss. Option A refers to fraud prevention, not subrogation. Option C does not describe subrogation. Option D refers to policy amendments, not subrogation. Question 27. Which of the following is a characteristic of a term life insurance? A. It provides coverage for the insured's entire life. B. It builds a cash value over time that the insured can borrow against. C. It provides coverage for a specified period, such as 10, 20, or 30 years. D. It only provides coverage in the event of an accidental death. Answer: C. It provides coverage for a specified period, such as 10, 20, or 30 years. Explanation: term life insurance offers coverage for a specific term such as 10, 20, or 30 years. It does not accumulate cash value like whole life insurance. Option A is incorrect because term life is for a specified period. Option B describes whole life insurance, not term life. Option D is incorrect because term life covers death by any cause, not just accidents. Question 20. Which of the following is an example of an exclusion in a health insurance policy? A. Coverage for an emergency room visit. B. Coverage for routine checkups and preventive care. C. Coverage for cosmetic surgery. D. Coverage for a hospital stay due to an accident. Answer: C. Coverage for cosmetic surgery. Explanation: many health insurance policies exclude coverage for elective or cosmetic surgeries unless they are medically necessary. Option A and B are typically covered by health insurance. Option D is typically covered as well, assuming the accident is not excluded in the policy. Question 29. What is the main purpose of liability insurance in a business context? A. To cover the cost of repairing property damaged by employees. B. To protect the business owner from legal claims and lawsuits resulting from injuries or damages caused by the business's operations. C. To cover the cost of business equipment and machinery. D. To insure the business owner's personal property against theft. Answer: B. To protect the business owner from legal claims and lawsuits resulting from injuries or damages caused by the business's operations. Explanation: liability insurance protects business owners from claims and lawsuits that arise from accidents, injuries, or damages caused by their business activities. Option A refers to property insurance, not liability. Option C refers to commercial property insurance. Option D refers to personal property insurance, not business liability. Question 30. Which of the following best defines moral hazard in the context of insurance? A. The risk that an insurer will not have enough funds to cover claims. B. The risk that a policyholder will take on more risk because they have insurance coverage. C. The likelihood that an insured will make fraudulent claims. D. The risk that the insured will misrepresent information on their application. Correct answer: B. The risk that a policyholder will take on more risk because they have insurance coverage. Explanation: moral hazard refers to the idea that having insurance might encourage the policyholder to take on more risk because they are protected financially in the event of a loss. Option A refers to insolvency risk, not moral hazard. Option C refers to fraudulent behavior, which is a form of moral hazard, but not the definition. Option D refers to misrepresentation, not moral hazard.